This is going to be a review over today's price action, September the 14th, or excuse me, September the 13th. Coming into the day, we had a big gap up, bear bar closing on its low. It's a stop interest short below, but just like the prior day, which was Friday, we may sell off to the moving average and go sideways. Here we got a spike of channel. Test the top of channel, measure, move down. I don't think we'll get that today. Bar 1 and bar 2 consecutive bear bars, always in short, strong enough that you'll get a leg or two down. So if you're short, stop above. Testing the moving average, probably going at least a little bit lower, but could just be a sell vacuum and an early reversal. Tight enough channel that will probably try and form a higher low major trend reversal. You can call it a cup and handle where you get a sell off, a rally, pull back, but after this many bear bars, probably sideways at best for the bulls. Big bull bar, however, it's probably going to have to go sideways, maybe a little bit lower after this many bear bars, so not a great place to buy. A lot of traders bought and scalped out. Low one short, but you've had big down, big up, probably forming some sort of trading range on the open. If you're selling, stop up here, and it's a swing trade. Big bear bar, probably going at least a little bit lower. Strong enough that's probably a little bit of a surprise. Make it a wedge. 1, 2, 3. Follow through bar. Testing yesterday's close. So again, maybe a little bit lower, but probably going to be forming some sort of early low of the day. At least a low for a couple hours. This is probably not sustainable. Plus we did this yesterday. Another bear bar. Pause. Outside. Almost outside down. Low and short, but at support, probably a bad short. Traders should probably be buying down here at least for a scalp. Testing the breakout point over here. Second entry buy, you can call it a first entry pause. Couldn't trigger below in the second entry. It's tight enough channel. 1, 2, 3, 4, 5, 6 consecutive bear bars. Probably going to have to go at least sideways before we go much lower or higher. Outside down. But again, I don't think we'll go much lower. And big bull bar. And now we have a short, so we have a 1 push up, pause, 2 pushes up, pause, 3 push. It's a wedge, but overall trading range, I wouldn't sell below it, but I think we're gonna go mostly sideways. Probably we'll have to close this gap before we go a little bit lower. Close the gap. It's a micro channel. 1, 2, 3, 4, 5. 1, 2, 3. It's a 4-bar micro channel. Alternating bars, probably forming an early trading range. And at this point, I don't know. I think that we're going to form a trading range, so we may go a little bit higher. We may pull back and try and test these lows. And that's what we did. So we bear breakout. So 1 push, pause, 2 push, pause, 3 pushes. It's a wedge. 1, 2, 3 with the lows down here. Strong enough breakout makes me think we're going at least a little bit lower. Enough of a surprise for maybe a few legs down, but the bears really need follow through, or else it's selling low in a trading range day, or selling low in a trading range. Bad follow through. So strong enough that we may go a little bit lower, but this is bad follow through. So a lot of traders sold, scalped out. A lot of bulls may buy or buy back their shorts. Some bulls will buy for a scalp. So strong rally, trying to test this high. The bears want a pullback test of the moving average and then a new low. Just so we have a lower high, new low, lower high, new low, lower high, new low, and all the way down. Second entry short. It's an okay swing short, but I don't know. It's not all that great. A lot of times you get sell-offs that look like this where it's disappointing all the way down. So it's not quite enough to be always in long, and therefore traders will sell. So one thing you have to question is 1, 2, 3, 4, 5. Why 6 consecutive bear bars? Makes me think we may go a little bit lower. Big bull bar. Trying to break above the moving average, 3 consecutive bars. It's a breakout test of this, so traders sold, scaled in higher, maybe they scaled in below there, sold up here, and they're getting out of break even. But the bulls need more. Another short at the moving average, but again, not all that great. looks more like a trading range than a bear channel. 2 legs up, trying to break above this lower high. And even if we do, it's a trading range. This is not a major high or low, so in other words, this lower high did not lead to a new low, so it's more minor, and it's possible that this is still the major lower high and that we may just be testing this trend bar. We had a big sell-off here, so we may have to retest somewhere up here. Trying to get above it. You can call it a wedge, triangle, 1, 2, 3, wedge, 1, 2, 3. So some sort of triangle, some sort of kind of like that. Possible final flag if we break below and turn up. And there's the triangle, lower high, doesn't matter what you call it. So tried to go above, couldn't, and we're starting to sell off. So we failed to break out to the upside. We turned down second entry short. It's a reasonable stop entry short, but again, it's a trading range, so it's not great. So as I said earlier, it's possible final flag, and you have to wonder, it's tight channel, 1, 2, 3, 4, 5, 6 consecutive bear, well, it's a micro channel, 5 consecutive bear bars, 6 bar micro channel. Breaking below these lows, may break below these lows. This is a breakout in terms of time, so it makes me think we'll go a little bit lower. But as with anything, when you get a final flag, late in the move, usually, no matter how strong the breakout is, you turn up and retest it. I say no matter how strong the breakout is. Usually, the breakout will fail fairly quickly and you turn up. So, still getting a micro channel. We get a bull bar, but it's a 1, 2, 3, 4, 5, 6, 7, 8, 9 bar bull micro channel or bear micro channel. First slope will probably fail. So, a lot of bulls will be rather hesitant to buy above it. Now, traders do see this. I'm going to get rid of this for now. Traders will see a channel. And there's many ways that you could draw it. Some will see it like that. Some will say maybe it's something like this. Really doesn't matter. You can draw like this. It's a breakout, pullback, and a channel. So lower high, lower low, lower high. Bears want a lower low. And you have to be open. It's also a wedge. 3 pushes, 1, 2, 3. Doesn't matter how you want to draw it, but I really see it as a failed breakout. Bulls want a failed breakout of a triangle and reversal up, possible, and a final flag. So going lower, and same thing. If we go above it, I think it's a micro channel. I still think we'll fail. Now, on a small time frame, it's a wedge. 1, pause, 2, pause, 3, pause. So I think we're going to bounce, but it's not strong enough to buy it. It's a fairly tight channel and increase the chance that we get some sort of downward breakout. So pull back above the wedge, testing the moving average, and then we get a big bear bar. So now we have another wedge. 1, 2, 3. 1, 2, 3. So some traders will say it's something like this. I don't think it really matters. Second inch, so now we have another buy. It was reasonable buy above here. Bulls will probably buy more lower, and we'll probably have to get back there at a minimum. And we got back to it. So what happened here? Well, it's tight channel. First low's probably going to fail. Bull bar couldn't trigger. Strong enough breakout, you may get a small second leg down. We got that. A lot of times traders they'll try and buy above it, doesn't trigger. And if it goes below, well, let me put it this way. A lot of traders will buy above, and if it goes below, they'll scale and lower, or they'll buy, get stopped out, and buy again above bull bar like this, and double their position. Here it didn't trigger, so a lot of traders would not have bought above it. And it's still rather tight, so it's not a great buy to begin with. So consecutive bull bars, but tight channel at the moving average, not closing above it. Is it always in long? You probably need one more bar. And if you need one more bar, just like it was almost always in long here, almost always in long here, traders will sell it. So low one short, lower high, new low, lower high, new low. But it's a low one short. It's getting late in the trend, so it lessens the probability that it'll be successful. So, some bulls will buy, they'll hold below it, but a lot of times in a trading range, it's limit orders, so it forces you to, if you're trading on stops, it's the opposite of what limit order traders are doing. So limit order traders are buying these lows, taking profits up here, profits at the moving average. They're selling at the moving average, taking profits on low end shorts. So they're doing the opposite. So they're buying on strength to the downside, and then they're selling strength to the upside. They're buying strength to the downside and selling strength to the upside. And so bad low one probably is going to fail. The bulls need to get above the moving average, though. You can argue that this was the wedge bottom. We broke below it, turned up. Probably will have to test the top of the wedge. And now we're trying to test it again. So tight enough channel. First slope's probably going to fail. We've tested it, and then we get another bull bar. So probably going to try to break to the upside. You can call it a double bottom. Neckline is up here. I still think, again, the apex of the moving average is, the apex of this triangle is, let's just call it for easy measurement, 45.50, maybe 45.51. I think we're going to get up there. And it also coincides with the top of this channel. And there you go. So 3 consecutive bars. Is it always in long? Probably, but late in the day. And usually channels to the downside form trading ranges. So big bull bar, trying to get above here, clearly getting back to the apex of this triangle. And what time is this? 4:30. So again, is it buy the close? Probably, but I wouldn't buy up here late in the move. And you could get a fairly sharp reversal or deeper pullback. Only 30 minutes left really in the day. And bulls will get out below any bear bar. So a lot of bulls will get out there. Some bulls will, though. They'll buy because it's a micro channel betting on another leg up. And that's how the day closed. So let me just kind of update a few things. So what happened here? We had a channel that converted into a trading range, and now we'll look back and wonder, are we going to get the measured move down? So we're going to get this. Are we going to get this measured move down, or are we going to get a measured move up to these highs, which would take you somewhere up here? What do I think is going to happen? Well, I think on a higher time frame, we've been in a trader channel. So 3 pushes down, pull back, testing these highs, selling off, pull back, selling off, pull back, selling off. And if you notice, it appears to be getting stronger later in the move. So, at this point, channels always form wedge bottoms. And let me just go to like a 30-minute chart. Probably paint it easier. And what do you notice about this channel? Well, what I would notice is it's broader up here. It gets tight, lots of bear bars. But the pullbacks aren't really all that deep. I mean, I say that they are pretty deep. But what I'm really getting at is, though, you're getting a fairly strong, is this a pull? These became pullbacks. Traders sold in the upper third, and we reversed. They sold halfway to the upper third, and we reversed. New leg, sold halfway, really the upper third, and we reversed down. This is a lot of buying pressure, which makes me think that we may get a second leg up and test somewhere up here. So I hope this video helps. Comment if you have any questions.